S&P 500 futures are. They're completely flat. We are oscillating in a tight 4-point range on the ES right now, and the bell hasn't even rung yet.
Yeah, strictly neutral tape this morning.
Right, neutral to... Honestly, it looks like a liquidity trap. If you're just glancing at the implied open, you'd think nothing is happening. But underneath, the 10-year Treasury yield is hovering at 4.06%.
Up 2.3 basis points overnight.
Exactly. We are stuck right in the middle of this macro dead zone.
Yeah.
We had the Goldilocks jobless claims print yesterday, but then overnight, Tokyo's core CPI just surged.
And that Tokyo print is the catalyst waking up the bond market. Because right now, the market is trying to digest the war shock.
The Kevin Warsh nomination for the Fed.
Right. It is a completely hawkish curveball. Markets are essentially battling between these record AI earnings we've been seeing and the sudden, very real threat of a higher-for-longer regime under Warsh.
Because global inflation heat is basically putting a floor under yields globally, right? And the domestic labor market here is just too resilient for a Fed pivot anyway.
Exactly. So my immediate warning for anyone listening, do not mistake this flat tape for safety.
Pre-market volume is thinning out.
It is severely thinning ahead of tomorrow's PCE data.
Yeah.
This isn't a calm market, it's a tactical stalemate.
Yeah, a total stalemate. Let's look at the pre-market gappers because the movers are telling a very specific story today. Starting with NVDA. NVDA is up 2.2% pre-market.
The market savior right
It
there.
really is. I mean, it's the only thing keeping the Nasdaq from a technical breakdown this morning. Twofold driver here. First, we got the Q4 beat and raise, confirming those massive 70% gross margins.
Which is just an unheard of metric at that scale.
Right. But the second part, the overnight news, is this massive sovereign AI infrastructure deal out of the Gulf. Plus, the Vera Rubin rollout is completely overshadowing any of these macro fears we just talked about.
The sovereign AI aspect is the real why here. We are seeing a fundamental shift. Data center demand is moving from private enterprise, the big tech companies, to actual national security budgets.
Right, nation states buying chips.
And sovereign wealth funds don't care about a 4.06% 10-year yield. They have infinite time horizons. That's why NVDA is catching this sustained bid while the rest of the market is frozen.
But then you look at the other side of the retail spectrum. Tesla. TSLA is the major laggard today, down 3.8% right now.
That's the EU probe hitting the tape.
Yeah, a formal EU probe into autonomous driving safety standards. The risk here is that regulatory friction is officially outstripping their software progress.
And the charts are reflecting that fear perfectly.
They really are. I'm looking at the key level right now. It's testing the 800 support. If 800 snaps today,
the retail exit will be incredibly violent.
it's going to be a flush.
Yeah.
So we have tech diverging wildly. But let's look at the defensive rotation because Walmart WMT is up 1.1%.
Classic trade down behavior.
Investors are fleeing that high growth volatility and just hiding in cash flow. Groceries.
Right, and it pairs perfectly with what we're seeing in Newmont Core. NEM is acting as the ultimate hedge this morning.
Because gold just surpassed the $5,000 an ounce milestone.
5,000. It's a historic print. And the why here is crucial for your playbook today. This is a flight to safety trade that is uniquely decoupling from traditional dollar strength.
Right. The DXY is still strong, but gold is ripping anyway. That means institutional fear is overriding the currency mechanics.
Which brings us to the deeper institutional flows. Let's talk about Salesforce, CRM.
Yeah, the AI reality check.
Their earnings just gave us the takeaway that AI agents are finally hitting the top line. It's moving beyond hype and into actual revenue.
I've got the levels for CRM right here. For the bull case, it needs to hold 195. It has to sustain above that 50-day moving average to target 210.
But if the macro takes over,
Then you watch 168. If yields keep pushing toward 4.5%, CRM is going to lead a massive rotation out of software.
and that rotation is already happening beneath the surface. We're seeing a massive institutional rotation out of the Mag 7 and into small caps. It's hitting a 5-year fever pitch right now.
But there's a huge divergence there. Semiconductors are actually showing relative weakness, while software is trying to hold the line, or vice versa, depending on how this Warsh reaction shakes out.
Right, and that leads directly into the biggest pain trade on the board today, the bear steepener.
Let's break that down for the active trader. The retail assumption right now is that Warsh means dovish, or at least lower rates eventually.
But the institutional reality is completely different. Institutions know his nomination brings inflation fears to the forefront, which causes long-term yields, the 10-year and 30-year, to just rip higher.
And a bear steepener completely crushes long-duration assets, software, high-multiple tech.
Exactly. It's a toxic environment for anything that doesn't have immediate cash flow.
All right, let's get into the hard data. The lines in the sand for today's session, S&P 500 futures, the ES. as we said, compressed inside yesterday's value area.
Tight coil.
The line in the sand for the ES is 6,145.
Yeah.
Above that, the bulls have control. Below 6,145, it is a bear's mean reversion day.
And if they push it up, where is the ceiling?
Heavy resistance at 6,180 to 6,195. That is a massive supply zone. Sellers are going to aggressively defend the all-time high there.
And the floor?
The floor is 6,110. It's a high-volume node. If we see a failure at 6,110, we're flushing straight down to 6,075.
Okay, what about the Nasdaq 100?
For the NQ, your line in the sand is 21,250. That is the pivot point for the entire session.
Watch that closely.
The ceiling on the NQ is 21,420. And you have to be careful here, it needs a sustained 15-minute close above that level to avoid a bull trap.
Do not buy the first breakout.
Never. Now, the floor in the NQ is 21,080. That is critical structural support. If 21,080 breaks, it triggers an immediate test of the 21K big figure.
So layering a strategic overlay onto those levels, the bond market is the ultimate tell today.
You have to watch the 4.1% mark on the 10-year yield.
If the 10-year breaks above 4.10%, that neutral sentiment we're seeing on the index futures completely evaporates. The tech rally will hit a brick wall.
DXY is sitting at 97.65 right now. A slight retreat there gives the equities a little breathing room, but it is incredibly fragile.
Very fragile. So how do we execute NVDA today?
For NVDA specifically, your bull trigger is 212. That's the all-time high breakout. But only take it if pre-market and open volume is tracking over 200 million shares.
You need the volume confirmation and the bear trigger.
Bear trigger is 188. That's the gap fill. If it flushes to 188, that is an institutional reaccumulation zone.
So the playbook for today overall, I'm calling it the post-data hangover.
Yeah, that fits perfectly.
The strategy is to fade the extremes. Do not chase breakouts in this neutral environment. The look above and fail is going to be your highest probability setup today.
And risk management has to be dialed in. Keep your position sizes to 50% of normal, because volatility is artificially suppressed right now, which means when the move finally happens...
It's going to be a violent liquidity gap.
Exactly. Before we wrap, I want to leave you with a thought on this whole sovereign AI concept we touched on with NVIDIA. We are seeing data centers shift to national security.
The implications of that are staggering.
They are. Yeah. If every nation state is building out their own sovereign AI infrastructure using NVIDIA chips, we are effectively watching the balkanization of the global internet.
AI nationalism.
Exactly. The era of a borderless tech landscape might be over, and we're just now seeing the market price in these plinternets. Something to keep on your radar as these massive Gulf deals keep hitting the tape.
That's a huge macro shift. But for today, focusing back on the immediate session, the indices look boring on the surface. But under the hood, the big money is repositioning.
Don't be the liquidity for the institutions.
Wait for your levels to hit. 6,145 on the ES, 21,250 on the NQ. Or just stay flat at the bell. There's no shame in preserving capital.
Market opens in less than 10 minutes. Let's get to work.